Okay. Okay, and we are live. Good morning, everybody, for another episode of the Crypto Hour. Today we are going online at the same time as the AAW Wealth Acceleration Workshop. So many of you will be watching this as a recorded episode. But I wanted to make sure I thought about cancelling today because of the coincidence on the two events. But I thought, in view of what's going on the crypto market, I thought it was important to do an update so that we could cover the absolutely bloodbath that we've been seeing in crypto in the last couple of days. Okay, so we'll do a short and sweet session today. So we'll have to finish on time at exactly 9 o'clock as I have a session that I need to lead on the Wealth Acceleration Workshop too. Okay, so let's go straight into it. Let me share my screen. Okay, we start first of all with some general things, and then we'll go on the absolute mess that we find ourselves in. Okay, so this week the main economic news, macroeconomic news. There's a couple really. As you can see, it's been a fairly light week in terms of important announcements. Obviously, there have been the elections. There have been the big event of the week, the election in the US, and the results have been not as bad as people expected for the Democrats. So it's in a way it's been reassuring a little bit the market. There's a little bit of continuity in the political spectrum. But this is, economically speaking, this is the announcement of this week. So there was the inflation in the US, which is starting to, peter off. Okay, so it's lower than it was expected. And it's the annual rate, so it's 0.4% month on a monthly basis. On an annual basis, it's gone down from 8.2 to 7.7%. Okay, even lower than expectation. It was at 7.9%. Okay, so this is one of the things that everybody's looking for. This is why it is important, because interest rates is the main target of the action by the central bank, the US, by the Fed. Okay, so they are trying as much as they can with the interest rate rises to bring the inflation rate down. So this is the first time really that we've seen an effect on the policy that's been enacted by the Fed. And it is kind of important because this will determine the future interest rate rises and the new initiatives that will be taken by the Fed to carry on tightening the money supply and increase interest rates. So it is thought that if we see good numbers from inflation, so inflation starts to go down, then the speed of raising interest rates will slow down. So maybe next month we may not have a full 0.75% rise as we had in the last 3 months, but maybe a little bit smaller, maybe 0.5 point or 0.25 point. And so it is an indicator that things are going or are not going, depending on the numbers, in the desired direction. Okay, so and the market, it's at the moment it's in kind of fear, so it's all doom and gloom because the economy is starting to actually ease into in a technical recession in the US. So, any news of increased tightening or increase in interest rates actually creates more worry about the future. Okay, so this is kind of like it's been good news for the market, and we can see in a second how the market has reacted in the charts. There isn't much else in today. We just have the in the UK, we're going to have, we just had actually the GDP, which is come down actually lower than expected. So we're now at minus 0.6%. So the UK is in recession as well. Okay. And the only last important bit of data of this week will be the consumer sentiment preliminary. So it's not the main index, but again, it will tell us, how confident the consumers are in their spending attitude. Okay, and obviously it's a leading indicator in a way, because if consumers are not confident, then they hold on to their money instead of spending it, and so that has a cascading effect then in business and so on. Okay, so this is from a I'll say macroeconomic point of view. So just remember the two things, and everything stopped towards the beginning of the week, end of last week, because of everybody was waiting for the elections, that took place on Tuesday. So it is now in the next couple of weeks that we'll see the results of the activity resuming after the elections, and then the reaction to the reduced inflation numbers that we're seeing. Okay, now this is kind of like the news, as you can say, the articles you can get in Investopedia if you want. The consumer prices rose last month at the slowest annual rate since January. Okay, so it's, again, this is what I was telling you before, and you can check the difference. The two indexes. This is one that includes all items, and this one, which is lower, this has 6.3%, includes all items excluding energy and food. Okay, so obviously, as you can see, the influence mainly of energy is quite significant. So it's over, almost like 1.5 percentage point. They are due to, directly and indirectly, because the food is highly dependent on energy as well, because it has a high energy input before they get the output, and then we see the food in the supermarkets. So I would say the influence of energy on the inflation is almost like 1.5 percentage points, and this is significant as well. So that if you think about it in future, in the next few months, now we've had the big increase in energy last year, following the start of war in Ukraine, and the kind of the supply redistributing in a way to then make sure that especially Europe could get their supply of gas and oil somewhere else than Russia. But that increase is pretty much now got to the top price that it could. So from here on, it's unlikely to keep going up in price, and so the effect of it on inflation should start coming off the chart, the inflation chart, because compared to when the actually price went up, now it will be less. It will drop off the numbers in a way that are calculated to calculate inflation. So on a different point of view, and this is kind of like UK centered. So this is what it means to me and you. And this is kind of like an average grocery prices for a family in the UK, are grown by £682, which, roughly we're talking about $800 a year, current rates. And so that, you see, this is kind of like, hitting everybody directly in food prices. And on top of that, because of the initiatives they are taking to bring down inflations, they also, people are hit in other ways as well. So they're paying more direct and indirect taxes to, to actually comply with the direction from the government. So kind of the general effect on the market is that people have got less disposable income. So this is just what people spend on food on average. But on top of that, there are many more expenses that were not there last year, including energy, for example, and other things. So generally speaking, there is, people have got less money to spend on disposable money after they pay for the rent, bills, and everything else, to actually go out and spend in the shops, or go out to a restaurant, or do anything that you could choose whether to, let's say, do it or not. So the long-term effect of this would be felt not so much immediately, but in the next few months, as it's basically a cumulative effect, as as more people hold on to their money, the velocity of the money slows down as well. So the velocity at which the money goes into circulation in the economy slows down. And generally, the money supply is a function of how much money is in circulation and how fast it turns. Okay, so the two things slowing down are almost like making things worse, on a compounding effect almost. And so this is why, when we look at the outlook for the next few months, it will take time before, let's say, this cog starts turning again, and turning in the other direction, and start combining in a positive way, rather than at the moment, compounding at at a negative rate. Now, let's have a look at what happened in the stock market, and we can see here yesterday actually there was a strong rebound. Okay, so this is where 1, 2, 3, 4, 5. So this is where we were last week. Okay, when we had this call last week. So yesterday the prices went down, but today the day before this, it was on Wednesday, the index went down, by not that much, but it did, and then yesterday there was a high rebound, after the announcements of the CPI results, because of what we just discussed a few minute ago. Okay, and because, let's say, people expect a reduction on the speed of the strength of the interest rate rises that are still to come. Okay, long-term interest rates are expected to, in 2023, are expected to grow from the actual 4% to a level of about 5.5 to 5.8%. So we still got some interest rate rises to come, but it doesn't mean that they don't have to come all at once, but they can be now staggered and start slowing down until the interest rate, the inflation rate reaches the target range, and then we can start thinking of, again, turning the wheel the other way, because the economy then would be hurting, and there would be political impetus into, say, opening the purse again, and then start easing the monetary policy. I'm not saying, I don't want to use the same phrase, printing money, but at the end of the day is what it is. They're printing money anyway. Even when they are tightening, they're still printing money. They're just printing a little bit less. It's not that it's disappearing, but it would be nice if they could control it. But I think it's at the moment the money supply is pretty much out of control. So the economic expansionary policy goes on regardless, and just like the rate of growth that can, at the moment, it can still control up to a point. So this is S&P 500. The other thing also that we always look at is the strength of the US dollar. As you can see here, in 2022, and this is where I just make it so just a 2022 chart. Okay, so this is 2022. Sorry. Okay, as you can see, as the dollar has got stronger, the stock market has got weaker, because people can get really decent returns now by just parking their money into bonds. So why would they go and risk putting money in? Just look at this chart here at the bottom, which is the stock market. So if you've seen that stocks, generally speaking, okay, with a few exceptions, generally speaking, stocks have gone down in price. Why would you put your value, your savings, in there? And why would you not keep them in dollars in your bank account, under your mattress, whatever you do with your money? So this is the reason why, as the dollar has got stronger, more people were happier holding on to dollars, either in the form of directly dollars in the bank account, but more likely either in bonds or in money market funds. So these are both instruments that are very easily, they're not liquid as a bank account, but they're very easily sellable on the market. And so they're almost as liquid as cash in a bank account. Okay, so now as you can see, and look at this, it's just like this is an example, almost like a perfect example of negative correlation. Okay, so you can see that the two things go in almost like opposite directions. Okay, and you see one goes down and one comes up. So look at this from the peak here, which was on Thursday or last week. Okay, so the peak here is almost like the bottom on the other chart, and as it starts going down, here it starts coming up. Okay, so this is at the moment, the dollar strength is inversely correlated with risk. Okay, so as people run away from risk, then the dollar gets stronger because it's like a reserve asset where people park their funds. And as the dollar gets weaker, then people get less basically reward for just holding cash in bonds, money market funds, and so on. And so they look for other places where they where to put their money so they can basically chase yield for their for their savings. Okay, so these are the two main things that we look at in terms of how the kind of perspective for the markets. I personally don't think that we are seeing this is going to be completely the decline of the dollar index. I expect to have another push up before it starts declining. But we'll see what the next weeks will take us. Now, if we look instead Bitcoin. So Bitcoin, I'll just look at Bitcoin so that it's indicative of the whole crypto market. Okay, so this is, and let me take this out in the moment. Okay, so we can concentrate on Bitcoin. So we can see what happened in the last few days. Okay, we were here last week, by the way, and everybody was happy. Yeah, the prices were going up. Yes, Bitcoin is now above 20,000, above 21,000. I did tell you guys that actually it didn't even get as high as I thought, because I thought they would start turning around at 21.5. It didn't even get as high as that. Maximum was almost at 21,480. Okay, so I was expecting 21.5 to 22 before it started coming down. Okay, now obviously it did start turning around, but this big drop is due to what we're going to discuss in a moment. So the big news about this week. Now, as you can see, yesterday the prices actually rebounded. Bitcoin got down as low as 15,500. Okay, so as you can see, this was the lowest of the year before this drop, about 17,004, and actually dropped to 2,000, almost like 2,000 more than the previous low. Now, as we've seen this strong rebound yesterday from 15.5 to 18,000, and then settling at about 17.5. Now, is this the start of a kind of like a growth phase, or even going back into range, which is this range really that we've had since since June? And I personally don't think so. I think this is a bull trap. Okay, so again, it's going to be like a testing this area again. So maybe going to again 18.5, and then drop again. And I do expect it to then test this area, which will go back to the 2019 highs, June highs, as you can see, and to between 14 and 13,000. Okay, so there are several levels that you can that you can buy at good prices in Bitcoin. I mean, this is already, for me, it's already a good price at the moment where we are now. But really, if you think the three targets, you can take them in target of 2,000. And the first buying point could be around 16,000. second around 14, and the third about 12. And the lowest I think we could get to would be 10,000. Okay, in this drop. Definitely there is I think one more drop to come before the crypto market starts growing again. Now, why, from a logical point of view, apart from looking at the charts, why are we saying this, that there is a chance of another big drop? And this is because of the drop off of the FTX exchange insolvency. That is the big news of the week. Okay, now this is what started it all out. Okay, so this is the chairman of Binance, and this is the tweet he put out, as you say, on the 6th of November, so 4 days ago. So it's so fresh. So we're saying that Binance was an early backer of FTX, was one of the original founders, and so they had a lot of equity in FTX. Okay, and they had they received, they say, 2.1 billion in BUSD and FTT for their stake in FTX. Okay, and then he said, due to the recent revelation that have come to light, we have decided to liquidate any remaining FTT on our books. Now, this is like, let's step back even from that. Okay, so originally, let's say Binance bankrolled the beginning when FTX was launched. Okay, so there was a good relationship between Sam Bankman-Fried, which is the chairman of FTX, and Binance. What happened after that is that these are kind of like rumors, but probably very close to the truth, that FTX started financing some crypto say news items that directly were aimed at creating FUD around Binance. Okay, and this got kind of like it reached kind of like the really high level in the end when Reuters actually published a series of articles that were aiming at CZ directly, and not only that, but even his children. Okay, so, and that was the moment when the thing started to sour between Binance and FTX. Okay, so last year they decided to basically liquidate their position in FTX. This is last year, so when they exited from the things, but this is what they were paid with, basically BUSD and FTT, which is the token of FTX. Now, after he tweeted this, and these are the rest, so this is a four tweet communication. Okay, he says, then we will try to do so in a way that minimizes market impact. Due to market conditions and limited liquidity, we expect this will take a few months to complete. Okay, and then says, this is kind of the one that got everybody nervous. Binance always encourages collaboration between industry players. Regarding any speculation as to whether this is a move against a competitor, it is not. Our industry is in its nascency, and every time a project publicly fails, it hurts every user and every platform. So what does it mean when a project publicly fails? At this stage, when he tweeted this, there was no news really around FTX yet. Okay, and then he says, we typically hold tokens for the long term, and we have held on to this token for this long. We stay transparent with our actions. Okay, so the following this tweet is what followed was pretty much a bank run on FTX, because rumors started circulating that FTX hadn't been managing customer funds properly, and that they might actually be insolvent. So everybody, obviously, they had funds on FTX, rushed to get them out of there. Actually, when we did our usual Monday session with the people that that I mentor, I told everybody, get your funds out of FTX as quickly as you can, because they might stop withdrawals very soon. And lo and behold, the day after, actually they stopped withdrawals. So for those of you, some people now started kind of reopen withdrawals slightly. So some people are able to take out some tokens, but not others. there has been a deal done with, to get, for example, Tron tokens out of FTX, but the majority of tokens are still locked. And the one thing to remind you is that this is a private company. Okay, it is a crypto exchange, but it's a private company. So your rights, when you have kind of money deposited in one of these things that goes wrong, like Celsius did, or Voyager, or in this case, FTX, if they go bankrupt, you're just a common creditor, to queue up together with all the other creditors. So you got no preferential treatment, even if that is your money that they used, and that is now kind of like disappeared. You don't have any special protection. Okay, so this is the thing that started it all, and then kind of it came to light that we have, on one side we have FTX, on the other side we have Alameda Research. Now, Alameda Research is an investment company that was started by this founder of FTX. So he had a lot of interest in FTX and also a lot of interest in Alameda Research. And what came to light is that by doing a research on the holdings of Alameda Research, it came to light that they held a lot of tokens that were illiquid. Okay, so basically they were kind of taking very risky bets on smaller projects on the crypto market. And they were, so this is the reason behind Binance decision to liquidate all remaining holdings in FTX. And so really what came to light is that the chairman, SBF, we call it, Sam Bankman-Fried, has used depositors' funds to finance Alameda Research, and this is kind of like a big no-no. Okay, so in a way, they were gambling away with other people's money. Okay, and again, the right way to run a crypto exchange is in a way like a bank. So to have enough collateral to be able to satisfy any request that you might have of withdrawals. Now, if you think about the fiat system that we talked about many times, one of the things that has caused massive problems in history is being the fractional banking decision. The fact that banks only have a fraction of the money that they lend out in their reserves. So they lend out a lot more than what they have. This is the same thing that happened in this case. So almost like they use customer funds to then go and finance other operations, which should only have been financed with FTX's own capital. Okay, not with money from depositors. Okay, so why is this? This is the result of all this, because the effect is not just FTX and the depository. I mean, this is big enough because we're talking about tens of billions here of assets, that, and the whole that we might have been left behind by this is estimated at being $8 to $10 billion. So it's not a small funding issue. And following this drop, there was a proposal then, actually the Binance looked into acquiring FTX to bail them out. But apparently after doing initial due diligence, they're seeing that it was beyond saving, at least according to their opinion. So they pulled out from the deal of buying FTX. Now, the result is that it's not just FTX and the personally SPF that will pay from all this, but it's all the companies that have been financed, kind of startups and different companies. They have been financed by FTX and Alameda Research, and companies they had their tokens as collateral. Because if you want to see what happened to FTT, okay, this is not a nice chart, is it? Okay, so he went down from, where were we on? Sorry, I can't see the date yet. So this was position on Saturday. Okay, so on Saturday, so after we spoken last week, we were up at $25 for FTT. Okay, now we are at 3. Okay, and we went down as low as 1.5. Okay, so this is the this is the effect. So it doesn't just affect their own token, but many other projects would have had FTT as collateral for loans that they have given to other people. So now what is going to happen? It really remains to be seen, and how many projects will go down as a result of this. What we are looking at right now is basically another Luna situation. And you know how bad Luna affected the crypto market in June, the Luna collapse. We're looking at exactly the same situation, because yes, we know now what has gone down and the kind of direct correlation between FTX and other projects, but the indirect correlations are less clear. Okay, so this will unravel throughout time. What we know, for example, just this is another one, BlockFi, false withdrawal, citing lack of clarity regarding FTX. Now they haven't just halted withdrawals in FTT, they have halted withdrawals altogether. So at the moment they're not able to operate business as usual. Okay, so this is why we are saying, not your keys, not your coins. Okay, so in a way that all the time that you are using crypto exchanges, you are liable to to fall prey to something like this, should it matter, that is not under your control. Okay, if you've got coins in your own wallet, you're in control of them 100% of the time. So that's the difference between having coins in an account like Binance, like Kraken, like FTX, like Coinbase, or having money on your wallet, maybe software like Exodus or MetaMask, or maybe like a hard wallet like Ledger. Okay, so there's a big difference between the two. Okay, so this is what happens. What remains to be seen, and like, for example, the Luna collapse is then brought with it the collapse of Celsius. So it's kind of like this could be the start of a cascading effects. And this is why I was saying as well that when we're looking at Bitcoin, probably we haven't just hit the bottom yet, because this needs to unravel first, okay, to see what the final effect is on the whole crypto market. So to limit the actual effect of this, because one of the biggest projects that was financed by Alameda Research and Sam Bankman-Fried was Solana, and Solana had had an unlock of about 1 million tokens coming yesterday. So 1 million tokens that had been staked and then came back into the market yesterday. This unlock has been postponed because the Solana price had already been affected quite heavily. We can see it again. You can see again here. So you can see how Solana was affected as well, going down from $36 to basically halving in value in a few days. And they didn't want the extra supply of Solana to affect the price further and cause a further drop. So, they'll say they have postponed the unlock, but then remains to be seen, and that's enough or not from to stop the bleeding, so to speak. But we'll see what comes in the future. Now, one thing that I wanted to also discuss with you, in moments like these, in moments when there are, really everything is red, everything seems to be going badly, this is where the biggest opportunity lies as well. And also it's also a way of the market ridding itself from bad actors. because basically, apart from what happened now in the past 3 days, if this is the way that we're managing the funds on FTX, it would have come out sooner or later. And there was like a highly critical comment as well from the CEO of Kraken talking about all this, saying, these guys have put all their energy in getting users on board and going out to spend a huge amount of money to get like sponsorship from kind of NFL teams, to doing adverts on the Super Bowl and all sorts of things, kind of multi-million deals to be seen and to attract new users. But then, the manager is saying this is only been, in his words was that this guy has only been in crypto for 5 minutes. So he hasn't built like Binance and like Kraken through the dark times of crypto and then come out the other way. So the management, the kind of the crisis management wasn't in place at all. And this is why all this is happening right now. So we still don't know at the moment what it is going to happen with FTX, if there is going to be a kind of a white knight coming to rescue them in some way, or if it is, if it will file for bankruptcy. So we don't know yet, and we don't know. I repeat, I don't know what the then cascading effect will be on other projects, and like not just another thing that happened, for example, on Solana following this, and I can show you on DeFi Llama, which is a DeFi so it shows all the DeFi chains, basically all the chains are active in DeFi. If you look at Solana here, the actual over the last 7 days, about 50% of the funds, the total value locked, has actually run away from Solana. I mean, as in generally speaking, you can see that it's all red at the moment, the last 7 days, and even on a monthly basis, a lot of funds have left DeFi space because of all this that is going on. But in particular, this is quite stark to see what's going on with Solana. I mean, look at the difference here. It's, I don't know if I can make it. This at the moment, I'm trying to. Yeah. No, I mean, it doesn't make much sense. I mean, it's already gone down massively from the peaks of last year, which was about 10 billion, and now we're standing at like $500 million. It's just like unbelievable. So basically, the DeFi on Solana has pretty much disappeared. Okay, so I would suggest that, I don't know if any of you are taking part in any DeFi projects on Solana. I mean, I don't know what's going on in the future, but just look at them. I'm not saying to take any action. Just say go and look at them. So don't just forget about them. But just pay a little bit of attention to the projects that you are participating in within Solana, because you might need to relocate your funds, or if you want to make sure that that they're still there, put it that way. Okay, on a positive point of view, we can say that Binance has started to publish, on the back of all this. The last thing we need is for people to have doubts about Binance, which is the largest crypto exchange. So they are talking this now, working on a proof of reserve system, and this is kind of like a Chainlink also as what was that? Chainlink as its own proof of reserve tools, for example, they have been developed recently. But this is they started by announcing the reserves on 6 of the 600 coins that they hold. So these are the reserves. So not only do they have over 50 billion in stable coins, and also they got like 8 billion in Bitcoin, 5 in Ethereum, and so on. But they also have the 1 billion in secure asset fund for users, okay, which is an emergency fund. If anything should happen, like in the past, there was a hack on Binance, for example. Some people lost their coins and they were completely refunded by Binance, for example. So this is what that is for. Okay, so obviously it doesn't cover the all assets. They are held in Binance because they're a lot larger than 1 billion. But at least there is something there. If something was to go wrong, they can use that fund. And it's recently been topped up because obviously it's the values are in cryptos. Crypto prices have gone down. So for 1 billion, the value has gone down to 735. Now they topped it up to 1 billion value in dollars again through BUSD, BNB, and Bitcoin. Okay, so in a way, this is a positive step. And I'll tell you, I mean, if the thing is that when like the leading exchange start taking steps like this, then it always makes it mandatory for all the other main exchanges to do the same thing. Because if they're being transparent and other exchanges are not, then obviously where would you rather keep your money? Okay, so that's kind of like a step in the right direction. And also with the indication as well that Binance is also actively looking to start purchasing some banks. Okay, so some real world banks, not talking about crypto here. So as they want to become more a more transparent and above board system that can work all across the world. So they put, in the last 12 months, they put considerable funds in beefing up their compliance department so that they can do all the work necessary to get then approval in all the different countries that they operate in, can get jurisdiction, they can get licenses and so on. So these are the results of this. And the next step will be actually to become in certain countries, actually acquire banks, so that then they can control the whole process of going from fiat to crypto and vice versa. Okay, so a couple more things that I wanted to share with you. One is regulation, and this is kind of like events like this, and events like the Luna collapse will generally make everybody aware of the need to regulate the asset class in general. So, and there are two senators, John Boozman and Debbie Stabenow. They have doubled down on their commitment to publish a final version of Digital Commodities Consumer Protection Act. Okay. Now, they wasn't quite sure how this, if they would go ahead with this or not, but it looks like it is going ahead. I mean, I don't know, it's still a long way to go before it becomes law, but it's kind of like it's a step in that direction. Okay, and this is kind of like another one that I wanted to bring a little bit of kind of good news as well, with all the boom and gloom that we've been talking about in the last few weeks. And this is, again, it's a neobank called Ping. And this Ping is being backed by Y Combinator, and they kind of like there's a seed round, and there's several VCs that are taking part in that. And so they wanted to help you expand from Latin America now to new regions. Okay, so what they do, they focus on digital nomads and freelancers working internationally. Okay, so it aims to ease the process of getting paid in dollars and converting those funds to local currency. Okay, so it allows the users to create a dollar bank account, invoice their employers, and receive local currencies or crypto through bank transfers. Okay, so it's an interesting concept. Again, it's one of those projects that will make, there's lots of projects now. They are trying to make that transition seamless between fiat money and crypto and vice versa. So this is one of those that is going that way. So it's nice to see that there are lots of kind of like important names that are finding this valuable, and so are planning to support projects of this kind, because they can see where the future is going in a way, and they can see that the future, especially of international cross-border transactions, they're still using a system developed more than 50 years ago. That's not really fit for purpose anymore. So there is a lot of work to be done until a new standard can be reached. But we have seen many projects now starting to use crypto as part of their cross-border payment structure. Okay, so Ripple is obviously one of the the names that comes to mind. For example, that is very active in the bank-to-bank market. And big projects like Visa and MasterCard have started using these systems instead of the traditional SWIFT method of moving things around internationally. So we are going in that direction, and all these news, in a way, like, forget about what price is doing, but look at the development behind the scenes. And I wanted to actually finish this before we go on to a few questions with again another tweet from the chairman of Binance. Okay, this is to all their team. Okay, this is like a few points. Like, first is they wanted to say we did not master plan this or anything related to it. So it was less than 24 hours ago that SBF called me. Before that, I had very little knowledge of the internal state of things at FTX. So I could do some mental calculation with our revenues to guess theirs, but it will never be very accurate. I was surprised when he wanted to talk. My first reaction was he wants to do an over-the-counter deal. Here we are. 2, as the due diligence for the deal is ongoing, this is before they decided to pull out, by the way. I want to remind everybody, do not trade FTT tokens. If you have a bag, you have a bag. Do not buy or sell. And then as soon as I finished the call with SPF, I asked our team to stop selling as an organization. So it hasn't been part of, this is what he's saying, okay? And more important, we need to hold ourselves to a higher standard than even in banks. So 3, obviously do not comment on the deal, etc., etc. 4, FTX going down is not good for anyone in the industry, and this is very true. Do not view it as a win for us. User confidence is severely shaken. Regulators will scrutinize exchanges even more. Licenses around the globe will be harder to get, and people now think we are the biggest and will attack us more. That's okay. We're used to being open and leaning into headwinds. Okay. In fact, we embrace scrutiny. So we must significantly increase our transparency, proof of reserves, insurance funds, etc. A lot more to come in this area. Okay, 5, and this is what I wanted to, so I can't highlight that. Speaking of prices, as I have said many times over the years, ignore the prices. Let's keep our heads down and focus on building products people use. It has always worked over the years, and today it's obviously no exception. Now, and I forget the rest, but this is something that I wanted to tell you, and especially for those of you that are new to crypto, there are many things that might be tempting, when you see all these crypto projects. But the first thing you should ask yourself, or anybody that tells you, look, this is a good token, and it is a good token to buy, and you should ask them, what does it do? And what would people use it? Okay, if you can get a clear, easy answer to that, then just walk away. Walk away, because there are no miracles to become rich overnight. And chances are, if it is something that you cannot understand, or that it sounds too good to be true, it probably is, and it is probably a scam, as most of the things that offer kind of incredible rewards turn out to be scams, or projects that don't have a long-term future in a way, because their goals are too high and they can't deliver it on what they are promising. So remember that the projects that are going to be there in the long term, and they are the ones that are building and doing good things, building good products for people to use are the ones that are going to be there in the long term. Now, I had a look, the day of, and this is a tool, by the way, that's easy for everybody to test. Okay, so this is CoinGecko, the main list of coins. Okay, when you get a day like we've had the other day, where you can see here in the 24 hours now, at the moment it's green because prices are rebounding. Okay, so when we looked at the other day, it was like a sea of red, basically. So every single token was in the red, apart from a few stable coins. Now, on a day like that, what you can do is you click on the 24-hour mark like this, and it will order the tokens in order of, the highest growing one. Like in this case, for the last 24 hours, Chili's is at the top with 23%. Okay, so at the moment, it doesn't really mean anything today. But if you look at this, when everything is red, will tell you the tokens are more resilient. Now, for 2 days, and this is with no judgment to me for anything, in order, okay, the 4 tokens they were at the top of that list, again, excluding stable coins, because even the tokens that were at the top of that list were still in negative. They still had lost value, but not as much as the others. And surprisingly, the top performer was Tron. Okay, in second place was Cardano. In third place was BNB, and the fourth place was Polkadot. Okay, so those are, I wouldn't, funny enough, I don't know why Tron was up there, and maybe I should look a little bit more into it, but definitely for Cardano, BNB, and Polkadot are projects that are building a lot. So, and this is why what kind of you should look at. Don't look at fantasy and people that tell you fables, but look at the real work that's going on behind the scenes, because those are the projects that are still going to be there 5 years down the line, and they are building the infrastructure of the future. Okay, so I think I've spoken enough. I hope you found this useful. So I'm going to stop sharing now and see if you guys have any questions that you would like me to answer. Okay, guys, feel free to either post them in the chat box or unmute yourself. Paul, I can see your lips moving, but you're muted. So I don't know if you're talking to me or you're talking to Maria.
I was talking to Maria. I said I wondered if we were going to have another roller coaster week next week.
Well, I say it's impossible to say at the moment. What we can do, I mean, from our side, we can start looking first of all what's going on in the economy. So we can start looking. That's the first place. Look at the calendar, thinking what's in store for next week. Okay, and we can see the big events of the week. So at the moment, again, just concentrate on the red ones. Okay, so you can. I'm not saying you can ignore the rest, but they don't move the market as much. Okay, so there isn't at the moment that much here. The manufacturing index here is fine, but we got the inflation in the UK and in Canada. And this is also the retail sales in the US a little bit. So nothing major here, that would move the markets, at least on a macroeconomic level, next week. The only one really could be the inflation rate in the UK. If it comes back, instead of 10%, it's like 12% or something like that. That could have an effect. But generally speaking, I don't see anything that could dramatically impact the market. Anything else, really, from the crypto point of view, it really depends on the fall down from the FTX saga. So what we need to hear in the next few days is what's going to happen to FTX, if there are any deals to save it as a going concern, or if somebody would like to buy it. But to be honest with you, I don't see who could actually buy out FTX, because there's nobody apart from Binance. There's nobody big enough to actually buy them out. So it's not just what happens to FTX. And by the way, he's been calling everybody, trying to get people to lend him money to survive, but not with much success, because everybody's seeing that, well, there are high doubts that he's insolvent, and nobody would lend money to somebody that is insolvent, nobody in their right mind. So this is even outside of crypto. Many other technology company in the US that he kind of tapped out asking for extra funds, but nobody was forthcoming. So I don't know if that will survive. The next thing we need to see is who else will go down with it. So what other projects will go down? And this is, again, you need to start paying a little bit of attention as well. When they say that there are VCs, they're funding projects, you've got to ask yourself as well who it is and what are they doing? Because apart from Alameda Research has come out from this, the other one is, for example, A16, which is another A16Z, I think, which is another large VC company. And again, they've been, you often see them, they are supported this project, they supported that project. But if you look at the project they support, it's pretty much anything that comes on the market. They kind of use the spraying methods. They put some money in everything and something will pay off in the end. So you really need to see their track record in supporting projects. It doesn't mean that because a VC is supporting a project, they will be successful. Cornelia, the 5 projects on Solana, you can see those on DeFi Llama. So this is for each. Let me share again so I can show you very quickly. So here, so this is the DeFi Llama. Let me go back. So if you go to the chains here, you can see all the different chains, that they have projects, on DeFi. There are 88 protocols on Solana. So by clicking on the chain, or if you can't find it on the list, you just type it here on the filter, on the search box. If you click on the chain, you can see all the projects ordered by total value locked. So the top one is Marinade Finance, and then Serum, Radium, and Lido, and so on. Okay, so those are the projects. There are some projects that are just exclusive to Solana. So you can see all these with the black symbol, which is the Solana logo. And there are some projects like Lido, for example, that is not just on Solana, but is also on Ethereum and some other chains as well. Like this one, for example, Maple is on Solana and on Ethereum. Okay, but most of them, as you can see, are on Solana only, and a few of them are multi-chain. Okay, so these are all the projects. I think there's a few more, 88, I think, was the total. The other thing, the main ones, are the ones that have any significant funds in there. So, I generally tend to ignore anything that's got less than $10 million on, of total value locked at the very, very least. Okay, so this is how you check. And again, it's not just on Solana, but in all the different chains. Okay, so you go into chains, and these are all the chains listed, and this is the market cap of the total value locked. You can see the Ethereum is at the top with 25 billion, Binance Smart Chain 5.5, and then you can see all the others. Okay. All right, let's see. Let's stop sharing again. I don't know what you mean, Cornelia. Could you please show how to find this resilience data real time? What exactly do you mean?
You just hi Luca, good morning. Thanks for a great morning.
No problem.
In a very crazy week. You just showed us something. Maybe I didn't understand correctly. That looking on CoinGecko on the 24-hour, you would press that, and then you would find the coins that were most resilient. You mentioned 4 of them, like Tron and DOT and one more.
Yeah.
How did you press that 24-hour? I never knew there was more information on.
Yeah. So it's here. Again, it's very simple. So on here, this is the normal thing, the screen when you go into CoinGecko. You can order this by any of these columns. So if you want in alphabetical order, for example, you see what I mean? You can go in alphabetical order. If you want them in order of price, like the most expensive one and so on, you can have, and then you can order the price, which is the coin that's grown most in the past hour, for example. or on
Maybe.
the last 24 hours, or
Okay.
on the last 7 days. Okay, or you can even click on the volume. So which is the coin that's been more traded? You can see Tether, for example, is the one that got most volume. You know, Tether, Bitcoin, and BUSD, and Ethereum is by far the most traded. So, and then the last one is market cap. Okay, so you can order this database by any of these columns. If I say, when you see a really red day, when things are going down like they did in the past couple of days, if you do the 24 hours, that would be mostly red, almost all red. So if you look at the projects that are at the top, and generally you need to kind of like discard the stable coins, because the stable coins would be up there as the ones that haven't lost any value generally. But then you look at the other ones that come afterwards, and those were the ones that I mentioned. It was Tron, Cardano, BNB, and Polkadot. Those were the 4 that held out better. And you can see as well in, we've been talking about, guys, the ADA Ethereum trade, that we shared in the community. And you can see here how much Cardano has done better. So both Cardano and Ethereum have gone down in price, but Cardano a lot less than Ethereum. So in these past few days, if you look at this, he went to almost like 20%. At the moment, he's then come back down. He's like 10%. So Cardano's done 10% better off than Ethereum in this bloodbath. Okay, so this is why I can say you can see the indirect relationship between so the direct relationship between projects. Once you take in the dollar out of the way, is actually quite interesting to see which project is going up against whom, and that will tell you again, if you look at all those 4 projects, you would have seen their relationship with Bitcoin, with Ethereum, with BNB, would have with Bitcoin and Ethereum would have changed dramatically. And you can see like Tron and Polkadot and Binance and BNB and Cardano would have gone up against Ethereum and Bitcoin by similar percentages. Okay, so it's very easy. It's very easy check to do for everybody. It's just like one click really. And you can do it for the 24 hours, or if you want, if it's got a more extended period, you can do it for the 7 days, and see again, at the moment, like over the last 7 days, Polygon has got the highest return again, but don't pay too much attention, to it in particular. It doesn't mean that I got to buy that coin because it's at the top of the list. Okay, so it just, I find this useful, not so much in normal times, but when the markets go down, then this is very relevant, because it tells you, which projects, let's say, the users don't run away when there is a project, but stay in because they trust that work is going on and there is and they're going well. So if you combine this with looking if a project is highly decentralized or not, then bring some real results. Like, I don't have, to be honest with you, I don't have too much information about Tron. It's not a project that I trust very much, but I know that both Cardano and Polkadot are 2 projects that they really value decentralization. BNB is the exception. Obviously, BNB is quite centralized as a project, as a blockchain compared to Cardano and Polkadot. But it's you start kind of like forming yourself an opinion, not because I tell you, but just by looking at the facts of which coins have more of a future, let's put it that way, and which coins don't. Okay.
Yeah, very, very clear. And what I only don't understand here, because Litecoin is also, it's not a stable coin. So what determines the order now that Matic is 15.5% up, Litecoin is 60.8% up? Why is Litecoin not above? I thought they would put it in order
at the moment.
Most green to most red.
Yeah. I clicked on the 7-day.
Oh,
okay, so
right.
On 7-day, these are the last column is the order.
Oh, yeah.
If you click
now
on 24 hours, then it does there's a different order.
Wow, this is really very big for me. Thank you so much.
No problem at all. Okay, guys, I will need to close the session here. I remind everybody that I do, this is kind of like a short version of what we do every week, and it's free to all. If you want to join me in our paid community, the International Academy of Wealth, then send me a email, and this is, I just put my email address here. And we can have a discussion about it if you need to talk, and I can tell you all about the community. Okay, so if you want to get in touch with me, that's my email address. And for all of you within the AW community that have trusted me by coming onto this version while Mark is talking on the other side, somewhere else on the net, I thank you very much. And I will see you, I'll say, across the pond, where my session starts at 9:30. Okay. And today, for example, for those of you that are not part of the community, I'll be talking and showing everybody how to stake on chain with the Ledger device. Okay, and so it's if you're interested and you're in the community, then come and join me there. And if you instead want to, Jonathan, is your session going ahead today? Yeah, okay. If you instead want to know more about Cardano, then Jonathan, if you don't mind placing the link as well in the chat box, come and join Cardano Jonathan on Discord for his session on Cardano that he does again every Friday at 9:30 after we close this room. So thank you very much, everybody. Again, thank you for trusting me with your time, and I hope remain calm at the moment. There's no whatever happens to the price, if you invested in big projects that are doing good work, then stay calm. Okay, if not, please panic. Okay. On this note, I will say goodbye. Have a great weekend, and I'll talk to you soon.